What's up, everyone? It's Caddy with Money Investing. Rita, welcome. Computer problems, we don't see anything. Hopefully you can see me now, and hopefully the audio is working too. We got about 14 minutes for the economic data to come out at around 8:30 a.m. Eastern is when we find out the producer price index, the PPI numbers, the core PPI as well. Give me 1 second. Let me actually go ahead and send some alerts over to our Discord. But let me know in the live chat if you guys can see the screen, if you guys can hear me without any issues. That would be very helpful. Thank you very much. Alright, Alright, welcome everybody. Hey, what's up, Peter? What's up? I'm gonna just send this very quickly over to our Discord. Good morning from Virginia. Dave, welcome. Welcome. Happy to have you all on board. So yeah, I'm just here to see what that economic data is going to be like. I've got a few reports that we can go over. In about 13 minutes is when the producer price index and the retail sales also come out. Atul, it's funny that you mentioned that. Hope your electricity problems do not cut you out. It's about to rain here in India, and there's supposed to be a storm later today. So what's one thing that happens every time there's a storm or it rains? Power outages. That's what happens every time. So I have my fingers crossed. Hopefully we don't have any issues, but we'll see. We'll have to kind of deal with it. If not, then I'll just jump over to our Discord, do like a market talk session, like an audio session there, if for any reason the YouTube live stream cuts out for any reason. But alright, so this is the expectations when it comes to the PPI data. So let's go over to Econ Day. This is something that I also mentioned earlier over at our Discord during our market updates section. So producer price index is a little bit different than consumer price index. So it's on the producer manufacturing side. So it takes into account all the prices for raw materials, inputs, and all those different things. So PPI final demand. The consensus estimate is, I believe, 0.5 percentage point increase over in the month of May, so 0.5%. When you exclude food and energy, same thing, 0.5%, that's the increase. Year over year, we're expecting 6.5% here. And when you exclude for food and energy, we're expecting 4.8% year over year. So these are both numbers that are hitting multi-decade highs. So the last time we saw 6.5%, I don't even know when was the last time. I think it was like 2011. So if you go to producer price index here, if you go over to data tools, or let's go over to, nope, it's going to be over here under charts. One fast answer, great morning everyone. Are we ready to make some money? Yes, we are. Let's go. Alright, so this is going to be the total. Alright, so 12-month adjusted. So this is what we're looking at in terms of core PPI and regular PPI. So you'll notice we're sitting at 6.2%. This was the prior number, 6.2%, and the expectation is for us to go to as high as 6.5. And then when you look at core, which is going to be the blue line, sitting at 4.6%, which is going to be right here, 4.1, excluding food and energy. So right now I have total less foods, energy, and trade services. So if I do goods, less food, and energy, should be at 4.7. So let me see if I can, goods, less food, and energy, so total food, less than energy. Alright, I'll have to try and find which one that is. So core PPI, excluding food and energy year over year, 4.1%. Yeah, because that one's taking out energy and trade services, foods and services. But nonetheless, this is the number, 6.2%. We're trading at a 12 or almost a 12-year high coming in from 2011 till now. So Adam, welcome. Hello, sir. Let's crush this week. Loaded up on Palantir yesterday. That's awesome. Sahil, welcome on board. Good night here. Good morning. Yeah, wherever you guys are watching from. So welcome on board. Is there inflation data announcement? Again, Freddie, yes. So today is the PPI numbers coming out. So that's going to be the producer price index. It gives us a good understanding on the inflation data on the producer level, the manufacturers, and what that change is going to be. Right now we're sitting at just about 6.2% for the total PPI. And the expectation is for us to go up to as high as 6.5 year over year, and for month over month to see an increase of about 0.5%. And for core PPI, which excludes food and energy, to sit at 4.8%. We've also got retail sales coming out. So if I go back a little bit, you'll notice that we've got the retail sales consensus also at 8:30 a.m. Eastern. So we got about 9 minutes left for that data to come out. So I've got Bloomberg and CNBC running both at the same time. So we'll see as soon as that comes out, I'll put that live on there. But retail sales month over month expected to decelerate about 0.5%. So you'll notice that following the great stimulus distortions of March and April, retail sales are expected to settle down in May, especially for autos. And Econ Day's consensus is 0.5% fall overall, with excluding autos. However, seen rising 0.5%, and ex-auto, ex-gas, and expected of 0.2% gain. So when you account for excluding vehicles, month over month, it's expected to go up. When we account for excluding vehicles and gasoline, month over month, we're expected to go up 20 basis points. So two really pieces of information is the retail sales and the PPI report, and then of course the FOMC meeting also starting today. And tomorrow is going to be the most important day when we learn more about inflation. We got interest rate decision, potentially even learn about the asset purchase tapering. So a full rundown on what to expect from the Federal Reserve on Wednesday. I covered this in a separate video, so if you want to get a little bit more in detail, make sure that you watch that video as well. But this is a meeting that happens 8 times a year, the FOMC meeting. That's the Federal Reserve Open Committee meeting. And it's a 2-day event, and it could, so it starts today and ends tomorrow on Wednesday. It could pencil down its first rate hike in 2023, and that's kind of like what the expectations are as well moving forward, according to kind of like my estimates. So reading further, the Federal Reserve is not expected to take any policy actions after its 2-day meeting this week, but it's likely to signal that it is thinking about them. So again, we're not expected to have any rate hikes, any type of asset purchase tapering, any type of inflation reassessment, but instead they're just going to start the discussion of actually doing any type of policy changes in the future. So some economists expect the Fed to mention in a coming tapering of its bond buying program and give preliminary guidance on the discussion, but not fully commit to tapering yet. So my estimate here is 2023. So 2022, I do apologize. So 2022 is when I see them actually pulling back on some type of a support. So right now they're pumping in a little bit over $120 billion every month in mortgage-backed securities, US debt. So I expect them to actually pull back on that asset purchases or start tapering starting next year, so in January of 2022. And they'll also release new economic forecasts, which is going to be very, very important as well for us to look into. And we also covered that in our summary of economic projections in our previous videos. So, all right, let's take a look. Who's talking here? So, Rick Ryder, a chief investment officer, global fixed income at BlackRock, basically says, and I quote, "I think the commentary at the press conference will be interesting. There's clearly a division on the board and among the Fed presidents about how strong the economy is and whether it's time to start evolving the policy. How the chairman describes that is going to be very interesting. It's hard to say it's going to be hawkish because I think it's going to be from uber dovish to overly dovish." And if you look at the dot plot, which is also something that we have covered in our previous videos, actually let me bring that up. Summary of economic projections, FOMC. So, all right, let's find that PDF. It's going to be down here. The dot plot shows you how many members of the Federal Reserve are actually looking for a rate hike and in which year, right? So that's going to be super important as well. Because this is the summary of economic projections that we went over in our previous video. If you scroll down, it gives us everything what the Federal Reserve is thinking in terms of their changes in real GDP, unemployment rate. So you look at the labor market, economic growth, PCE inflation. So the Federal Reserve doesn't look at the CPI number or the PPI number. That's the main headline number that we look at. So we got about 5 minutes left until the PPI report comes out. But what they look at is the personal consumption expenditure inflation. That's what they look at when it comes to inflation in general. But this is the dot plot that basically goes over how many members are expecting a potential rate hike in the future. So you'll notice that in 2023, we've got majority of people. So not majority, but about 7. So 1, 2, 3, 4, 5, 6, 7. 7 members of the FOMC, basically, or the Federal Reserve, expect rate hikes in 2023 as opposed to just 4 members in 2022. And you'll notice a majority of members in 2021, no rate hikes this year. Majority of people don't expect any rate hikes next year. And majority of members don't expect any rate hikes until 2023, but 7 members do. And then longer run, pretty much everyone expects rate hikes to be somewhere between 2 and 3%. That's what we're going to see. Right now we're sitting roughly at 0.05%. All right, so that's the full breakdown that I wanted to go over very quickly. So the dot plot, and we've already gone over a lot of the summary of economic projections, but let's take a look at how the markets are doing. So the Nasdaq is slightly up over 13 basis points, and the S&P is also up over 12 basis points. So very muted reactions. It doesn't have to be a huge reaction from the markets. It could very well be very muted as well, but we are starting to kind of go into this risk-on environment once again, where we're seeing tech and growth kind of pick up, right? It's more tech and growth as opposed to value and cyclicals. I was looking at some of the value plays. So you'll notice, of course, NIO has been on crushing it. Welcome on board, Space Maintenance. Happy to have you here. I see a lot of people are talking about AMC, so I'll cover that in just a second. We've had a nice trade on that. Apple also had a huge day, right? Yesterday it was up over 2%. But yeah, we got about less than 3 minutes for the economic data to come out. But let's take a look at some of the stocks here. So Corsair Gaming also up over 2.78%, but a lot of profit taking yesterday, right? This massive red candle traded all the way to highs of $42.97, almost $43 per share, and just a huge amount of profit taking for the stock. Kind of reminds me of Palantir. I mean, if you look at Palantir here, you'll remember that this had a very similar short squeeze, sort of infused spike in a couple days. You'll notice that we jumped over 25% here. We rallied over 75% before pretty much rolling over back down to like $20. And Corsair Gaming, whether this momentum is going to be sustainable really depends on how big of a target this is in the eyes of Wall Street bets, right? The short interest is roughly at 18, almost 19%. I think 30 million shares float, so it's definitely a good candidate for a potential short squeeze in the future too. But it's just how much people believe in this versus AMC versus other stocks that are out there as well. So I think the attention divides over time, and that's not something that's beneficial to potentially a short squeeze in the future, right? We want to be very focused on a few plays and focus on those, and then move on to the next one. So betting over or under on the PPI estimate, I feel like it's going to be on. So considering the CPI, which came in a little bit higher than expectations, I would not be surprised if PPI also comes in much higher than expectations. But this is what I've been saying a lot, is that it doesn't matter if the prices, I mean, it does matter, but to some extent, when the prices for these raw materials inputs for manufacturers and producers go up, it doesn't mean that they're going to be translated over to the end consumer either, right? It can very well just, the businesses can absorb that cost, and their margins are going to go lower because they're paying more for raw materials, but they're not increasing their prices, so their margins are decreasing. But when it comes to inflation, all right, let's listen on this here.
These are the last inflation numbers the Fed are seeing before its meeting kicks off today. It's a 2-day meeting. We'll get the decision from the Fed tomorrow, and people are waiting to see what happens. You can see the futures have barely budged ahead of all of this. Dow futures are down right now by just about 3 points. S&P futures are up by about 3 points. The Nasdaq up by about 18. Also, the 10-year, if you take a quick look, is sitting right at about 1.5%. Let's just double check that, 1.487%. Let's get to Rick Santelli. Rick.
Well, the first numbers to pop up are our June read on Empire, Gotham Manufacturing, and it's a bit of a disappointment. Expecting 22 and change, we end up with 17.4. That follows at least up to now an unrevised 24.3. On the retail sales side, down 1.3%. That's much worse than expected. However, we knew autos were going to be a distortion. So what we really want to do is, considering that the chip issue has really pushed off the inventory on the auto lots, we want to look at X autos. That hasn't cropped up yet. So X autos and gas is down 0.8, so a bit of an improvement, but also much worse than expected. Now, we'll go to the inflation numbers until the rest of retail sales propagate. PPI for the month of May expected up 0.5% is hotter, up 0.8%.
Yeah.
Strip out the all-important food and energy, it's up 0.7, 0.2 hotter than expected, and ex-food, energy, and trade up 0.7 as well. All these are hotter than expected. Now let's really get to the Moneyball numbers. The year over year. If we go final demand year over year, it's up 6.6. That's a new all-time high for this series dating back to November of 2010 in its current calculation form. And if we look at the year over year ex-food and energy, that's up 4.8, exactly as expected. And that usurps up 4.1, which is the highest going back to November of 2010. And the last of the year over year is PPI ex-food, energy, and trade year over year, 5.3, and yes, you guessed it, that's also a new high for this series, but this series only goes back actually to 2014. Okay, let's go back to retail sales, shall we? So we know the headline was minus 1.3. It should improve when you strip out autos because they were a bit of a drag. There's not a lot of inventory on the lots, and it did by almost half, but it's still down. It's down 0.7. This is where it was supposed to flip positive. And ex-autos and gas station sales, minus 0.8. So really, it's a miss on all cylinders with regard to retail sales, which means the control number is a minus 0.7. That gets plugged into other data points. So Becky, hot on inflation, weak on Empire manufacturing, weak on retail sales due to some glitches in the supply chain, and we see interest rates ticked up 1 basis point from 148 to 149 and change on 10-year note yields, and we lost our pre-opening positive Dow Jones. It's popped back a little bit, but we lost some of those points. Yeah, back to you.
Rick, if you take this whole picture, what does it mean to the Fed as they're sitting down to this two-day meeting?
Well, listen, to me, the Fed's the easiest call here. They have no idea where inflation's going to be down the road. The transient argument makes sense because this recession is unique. But, do you put all the chips on transient? If I was a trader, I'd be more like Paul Tudor Jones. I'd be a little leery of that. The Fed can't tell the future. Their prognostications in the past have been a D minus at best.
All right, let's listen on this.
Markets, we came off a little bit on equities. We come right back. I see markets not all that much moving. To me, Romain, maybe it's sort of stagflation.
Yeah, potentially here. You're basically unchanged right now for the major futures here. I am curious, though, Mike. When you get a read like this where you start to see consumer activity decline, which wasn't unexpected, but you start to see those prices go up here, at what point does that sort of reconcile itself and then you start to see inflation get tamped back down?
That's going to be over a couple of months, and it's going to be category by category. We'll see changes in probably the used car price numbers reasonably soon because more cars will start coming onto lots as the chip shortage ends and people can buy more cars and turn more in. The rental companies will get more in their fleets. Airline fares probably going to start leveling off, especially as business picks up. So
let me know when that happens.
All right, so as much as I was able to remember all those numbers, retail sales down. They were expected to be down a little bit over 80 basis points. We're down over 1%. When you exclude for autos, they were expected to go positive, but we are still down month over month. I don't know if they've updated that yet, so let's take a look. And when it comes to PPI, coming at 6.6%, if I'm not mistaken. So 6.6%, still a multi-decade high, as they mentioned. So coming in from 2011, that's still the highest level that we've ever seen. So new record coming in from 6.2%. When you exclude for food, energy, and trade services, 5.3%, that's the number, coming in from 4.6%. That's only been tracked since 2014, so that's still a pretty much of an increase. Let's take a look at the consensus for Econ Day for month-over-month changes here. So PPI final demand. All right, so here it is. So we got final demand for PPI month over month. The consensus was 0.5%. We actually increased a little bit hotter, right? So again, the CPI report last week gave us a good indication of what to expect in the PPI report, which is why I also mentioned that I would not be surprised if we actually do come out a little bit higher on top at 0.8%, than the 0.5% that we were expecting. But nonetheless, PPI final demand year over year is sitting at 6.6%. Over here, excluding food and energy, month over month, we got 70 basis points. Year over year, we got 4.8%, 70 basis point increase when it comes to excluding energy, trade services month over month, and year over year 5.3%. But nonetheless, I mean, very muted reaction from the markets. The yields did push up a little bit, just shy of 1.5%, and the Nasdaq is as flat as it gets, pretty much trading at $344.66. And the SPY is pretty much flat as well, up just over 8 basis points. All right, let's take a look at some of the comments here. So, all right, so Corsair Gaming up over 2.78%. Let's take a look at Tesla. Pretty much flat, very muted reaction across the board. And our retail sales, let's take a quick look on that too. All right, so actuals coming in negative 1.3%. So the consensus was negative 0.5%, and the excluding vehicles month over month, we were expected to go positive, down about 0.7%, and excluding vehicle and gasoline, expected to go positive by 20 basis points, and we're down about 80 basis points. So miss across the board when it comes to the retail sales. So usually retail sales, I mean, not a huge miss there, but definitely people are not spending as much money. When it comes to just those retail things, and they can be actually broken down into several different things, right? So you'll notice that it can be actually broken down into several different things. So the retail sales are a major indicator of the consumer spending trends because they account for nearly 1/2 of total consumer spending and approximately 1/3, so 33% of the aggregate economic activity. And the control group for retail sales, which excludes restaurants, vehicle, gasoline, and building materials, is an input into GDP that offers a narrower look into non-discretionary spending. So across the board, pretty muted reaction from the markets, while we're seeing a little bit of a follow through in the Nasdaq as the yields push higher. So the yields are now back over 1.5%, and the Nasdaq is seeing that decline of about 7 basis points as of pre-market. Let's take a look at some of these one-day chart here. So the yields are up, but energy and financials are still somewhat positive on the day, with technology, materials, healthcare, consumer staples, discretionary, all of them are actually down. What do you think about Xilinx doesn't get approved by the UK on July 6th? I'll have to do some more research on that. Michael, I'll have to definitely do some more research on that and come back to you with a explained analysis. But Xilinx acquires software developer Celexica for undisclosed sum. Yeah, so AMD is also looking into acquiring Xilinx by the end of this year is potentially when the deal is supposed to go through. We'll have some more information, of course, as the year goes by. But Lisa Su has also mentioned repeatedly on their earnings calls, that they are very close to approving it, and they are very close to kind of fulfilling that deal as well. But predictions for AMD, we've got a bull flag forming for advanced micro devices. We'll see if that actually does hold up. But this right here is the complete breakdown. So $80 is a really strong support for advanced micro devices, and I'm expecting at least a breakout from this bull flag at well over $84. That's the 200 SMA. That's the simple moving average, all the way as high as $88 per share. That right there is going to be the next two resistance levels to watch. DraftKings down negative 6.59%. Really? Wow. What's going on with DraftKings here? Did DraftKings has any type of a catalyst or any news here that basically led it to drop that much? Let's take a look. So Daigen, sorry if I mispronounced your name. So Hindenburg Research Report. Are they short or something? Did they put like a ridiculous price point on them? Yeah, I mean this is a steep drop here of close to 7%. And you know, this right here is going to be the complete technical breakdown in one of our other charts. So let me open that up in chart 2. And for DraftKings, you know, we were very weak, so to speak, on the daily chart here. So if I bring up DraftKings stock, you'll notice that we were forming some type, you know, of a breakdown from the moving average, and this right here was the resistance at close to $55. I think I also mentioned it to somebody on our Discord yesterday about DraftKings. I think a lot of people were asking about it. So this right here was a resistance at close to $55. As soon as we hit that level, we saw some type of a rejection for DraftKings, and right now we are potentially, looks like, on our way to $44. This could actually be setting up for a nice swing trade. So I'm excited to actually look into this a little bit more. Definitely gonna have some alerts set up to see where it closes, but yeah, that's a pretty steep drop for DraftKings. Not really sure exactly why that's happening. I'll have to do some more research to see if I can find some news. But this actually just started at 8:30. As soon as that report came out, is it the PPIs and the retail sales? Could be. But everything else has a muted reaction, so to speak. Is not moving much. So the yields continue to push higher a little bit, and the Nasdaq is down about 7 basis points, not really all that much, and the SPY is pretty much flat. Let's take a look at the Dow Jones. It's going to be DIA. We're pretty much flat for the Dow Jones as well. So predictions for AMD today, I already mentioned it, but you know, it's forming some type of a bull flag, so waiting to see if that $80 support continues to hold up, or if we do see any type of a breakout to the upside. $84 is going to be the next resistance, kind of aligned with that 200 SMA, all the way as $88 per share. John, yes, inflation data was today, so it came out about 13 minutes ago at 8:30 a.m. Eastern. You can kind of go back, and we broke down the PPI numbers, the core PPI numbers, the retail sales, and then tomorrow is the FOMC meeting. Well, it starts today, concludes tomorrow, so we're going to learn more about interest rate decision and what the Fed thinks in terms of the inflation, summary of economic projections, and all that other good stuff. That's going to be great for the equities market. So in my opinion, tomorrow I feel like the Federal Reserve is not going to make any changes to their policy. I mean, they're going to stick to the monthly purchases. They're going to stick with the interest rate that they have right now. My projections is that starting 2022 is when they're going to start tapering, and 2023 is when they're going to start raising rates in the future. Riot and Mara have been killing it. Yes, so Mara has actually been on an absolute roar here. I asked our Discord members if anybody of them did actually end up holding the swing trade that we took earlier. So this right here was a swing trade, and of course we broke out of that range. This was a long-term play for myself, so it wasn't a swing trade. And I also mentioned it to everybody that I'm planning on holding this and buying more under $30. And of course it rallied all the way to highs of $31, $32, and I wanted to buy more, but I'll still be buying more for Mara because this is a Bitcoin play. I easily see Bitcoin you know, over the long term. Again, this is not like a swing trade for myself, so over the long term I easily see the stock back up over $50, $60 range, and even beyond that levels as the price of our Bitcoin actually goes up. So yeah, but it's been on an absolute rally. So coming in from, you know, lows of $18 from May 12th, it's up over 74-75%. So we did see some type of a breakdown from this head and shoulders pattern, and you'll notice that we have just been rallying over this support and just outside and break out over those moving averages as well. So Reese says, by the way, that PPI came in red hot, largest increase on record. Yes, so yeah, we just broke down the report here. This was, you know, the largest we've ever seen, like since 2011 when it comes to total PPI, and even core PPI also coming in much higher than expectations, you know, from 2014. So definitely a very significant increase there. So Rita says, Heidenberg just came out and said they're shorting DraftKings. That's interesting. I'm not able to find that report. If somebody can share that report, we'll definitely go over that together and see if I can find any arguments that they're making on DraftKings. But you know, we've done some fundamental analysis on the company. and I think I also was watching an interview from DraftKings CEO, and they mentioned that they are, their customer retention is incredibly high. So it's not like they have to spend a lot of money on marketing to retain customers, but it's mostly for acquiring new customers that they are spending a lot of, because that's like the operational cost that they're spending a lot of money on. I mean, this company could be profitable tomorrow if it wanted to be, right? The stock compensation is a pretty big deal for DraftKings at the moment, and of course they're spending a lot of money on R&D, and of course selling general administrative expenses, marketing budget, all those things to basically keep up with the new trends, spend a lot of money on advertising. Like we've seen that, DraftKings all across the board. I think I also saw it during the fight over the last weekend when it was like, Logan Paul versus Mayweather. I think DraftKings was on there sponsoring, and of course they've been sponsoring on NFL as well. So they have been spending a ton of money on marketing. But that's just the nature of the business, right? Gambling, and as it gets more and more legalized, I think over the long term, this is a good buying opportunity if it continues to fall. But definitely, I'd like to take a look at that report as well. So it dropped down to 47.11 pre-market. Do you think it's a valuation thing? It's at $20 billion valuation. Let's take a look at the price to sales or price to earnings ratios either. So price to sales 25, and I think I was looking at the price to earnings. The 4P was a little bit higher as well. I mean, it has to be a valuation issue for them. It's not going to be anything else. It has to be a valuation issue for Hindenburg. But all right, so these are some of the price ratings from tip ranks as well. By the way, if you guys want to get started with tip ranks, the link is going to be down in the description below. Strong buy ratings, so we got 11 buy ratings, 3 holes, $69.93. So that's the price target. Low estimate of $50, so we are trading much lower than the estimate now. And across the board, we've got a lot of buy ratings from a lot of different analysts on Wall Street. But yeah, let me see if I can find that report. I'm not seeing that on the news section here. What is the support for DraftKings? It's going to be over here. So right, so NASDAQ is pulling back a little bit more, down about 8 basis points, and the S&P is pretty much flat on the day. Let's go over the DraftKings stock over here. So the next stop or the next support I have is going to be at close to 44.50 or 44.55. That's the previous resistance, previous support as well, and that right there, in my opinion, is going to be the first support level to watch. Good price to jump back in a NIO. So for DraftKings, 44.50 is going to be the support level to watch, in my opinion. So yeah, I'll definitely be looking into that. Watching at 44.50 for a potential swing trade on this, because this would basically mean that the R side of the MACD are already very oversold from pre-market levels. But we'll see if that actually does make for a really good, solid swing trade in the future. So I'll keep this on my watch. All right, so talking about NIO here, you'll notice that we are pulling back a little bit, about 86 basis points. It's no surprises that we are seeing a bit of a pullback here, considering that we have seen a bit of a rally coming in from back on $30, coming in from May 13th. We've just been on a consistent uptrend, right? That's been the pattern for Li Auto, XPeng, and NIO, not so much for Tesla, but a lot of those Chinese EV manufacturers, and that's up over 54%. XPeng is also up over 74%. I think Li Auto has been on the same trajectory, so it's up, let's see, it's up over 82% from back on May 13th. So again, this is the complete analysis from Li Auto, which I will go over in just a second if you guys want me to break down Li Auto as well. But NIO, there are going to be several support levels to watch. I'll actually go ahead and delete some of them to clean up the chart a little bit. So if you go over to the 4-hour chart, you'll notice that the 44.50 is going to be the first level of support, to see if you can actually validate that level. Because if I remove all these trend lines, one thing you can notice is that the 21 EMA has acted as a really strong support in this entire uptrend. The couple of times that we have retested that level, right? So you'll notice 21 EMA retest, 21 EMA retest, and right now we're seeing that pullback once again. So 44.65 is going to be the first level of support, because that's been the trend, right? We validated that support a couple times here. So looking at the previous history of the pattern, it would make sense why we would validate that once again before making the next leg up higher. But if for any reason we do see a more persistent breakdown, $43 in my opinion is going to be a much stronger support. That's also going to be aligned with that 50 exponential moving average. So that 50 EMA you guys see in yellow right now sitting at 42.47 will get more aligned with that $43 support. in the future as well. So yeah, those right there are going to be two support levels to watch. 46.30 looks like we are trading below that level. We're down a little bit over 1%. So two support levels to watch: 44.50 all the way as low as $43 for NIO. Zach, thank you so much. I really appreciate it. Thanks for the shout out here. All right, so let's break down some other stocks here. So let's talk about Li Auto. So if retail sales are down, PPI is out, doesn't mean that inflation is transitory. Where's the NASDAQ? Why is the NASDAQ going down on that then? I mean, it's not really going down, like I should say, like it's just pretty much flat. So this is the NASDAQ, right? We're not really down. We're pretty much just flat, down about 6 basis points. So, and you know, it's pretty much flat as of this right now, and S&P is just up over 3 basis points. So pretty muted reaction. And you know, we broke down a survey also. I think there was like 60% or closer to 75% of institutions on a survey conducted in June basically think that inflation is going to be transitory, and about 25% said that it's going to be more persistent or more permanent. So, you know, and I'm kind of aligned with that transitory approach, where I do believe that even though the prices for raw materials, manufacturing is going up, those costs are not actually getting translated over to the end consumer, which is what CPI calculates. So, and CPI is also getting skewed because of used auto sales and vehicles and trucks because of the supply chain issues. So we're in this sort of dilemma where I believe that inflation is going to be transitory in the future, and that's going to help boost NASDAQ and tech and growth stocks because the yields are going to retreat. You know, the Fed's policy, that's also very important for us to consider from like a you know, macroeconomic standpoint, because interest rate, of course, do affect longer dated stocks such as tech and growth names, because their earnings are actually far into the future, like 4 or 5 years out. When you're discounting them into the present value, you're actually taking a risk-free rate, which is the yields. So you know, that is very important in the future as well for tech and growth names. But till 2023, I do think that there is going to be strong bull market for tech and growth names, and we are going to see some significant, you know, in other words, like the bigger gains are still yet to come, in my opinion, for some of those tech and growth names. So Harry, welcome. So retailer report seems to indicate price gauging rather than inflation. Looks temporary to me. So yeah, I do agree to some extent with you, Harry, there. So DraftKings dropped because apparently there's a report that came out about Hindenburg Research shorting them. That's why they're down. And the next support to watch for them is going to be at close to 44.50 levels. All right, what other stocks are we watching, you guys? Let me know in the live chat what other stocks are we going to be watching. We got about 9:30, so 30 minutes left for the markets to open. And so far we got energy, financials, pretty much everything is flat. Nothing's moving much. Upstart, Josh, it's funny you mentioned that because I was just looking at that stock today. And it's also gearing up for a potential swing trade, so to speak, for this one. So you'll notice that we have just been on this ascending support pattern. So that's the higher low, that's the green line you see on the chart, and that's the horizontal resistance at close to 200 or 170, 169, 170 levels. Is the resistance right here, and the support is this ascending support. My thesis on this is going to be that the bulls are in favor right now. The pattern is strong, meaning that the demand is pushing this low at a much higher price, meaning that we're not going as low as we did the previous time. So eventually I could see a potential reversal here, considering the RSI and the MACD just started to come down. So I'll give this a few more days to really see where it kind of stabilizes for the next leg up higher, and for a potential breakout to the upside over 170, back testing that support before making new all-time highs. So yeah, this is definitely on my watch list. So thanks for bringing that up. Let's take a look at Alibaba. So Alibaba is going to be actually on a different chart. Yes, I'll cover NNDM as well in just a second. I'll cover a lot of different stocks here. So Amin, I'll go over Wish for you right after this one, since you are a channel member. So thank you so much for being a part of our community here. So, all right. So I was looking at Alibaba. So Alibaba stock is interesting because we're forming some type of a sort of like a falling wedge, and you'll notice that we did bounce off of that support at close to 210. So yesterday's low was 212. The day before that, the low was $211. So you'll notice that we are kind of falling into this wedge, which usually does lead to a potential breakout to the upside when we have this falling wedge pattern. So I've got two support levels for everyone to watch for Alibaba. I mean, fundamentally, it's no surprise that this is ridiculously undervalued, but $210 all the way as low as 194 are going to be two support levels to watch. 194, I'll be seriously considering for a bigger position in Alibaba stock, because that would just be like a joke price for Alibaba stock. Like this, in my opinion, if we were in like a perfect world, it should be trading well north of $300 per share. But with the regulations, with the scrutiny and all those different things, the market is just pricing in a lot of risk for this company. So 210 near-term support. If you do see a more persistent breakdown here, would not be surprised if you do kind of fill in this wedge all the way down to 194, and then eventually I'm expecting a breakout to start making higher highs and higher lows and break out above sort of like those moving averages as well. All right, let's go over to Wish. So Wish stock also had I think it had a short squeeze, if I'm not mistaken, it was like a couple days ago. Correct me if I'm wrong, but it was up over 49% here. It gapped up here to highs of $15, and then right now it's pulling back. So few levels to watch. Of course, there's going to be a strong support at close to 750 levels. We were consolidating right there with a lot of volume that kind of kicked in. There is a resistance here to watch for Wish at closer to 1530. And the reason I say that is because there is a previous resistance here. So previous resistance here, which was also a previous support for Wish. So, when patterns usually work in sort of like this way, what happens is, let's say this is a level, this is a key level for the stock. And we're just kind of coming down, and we test that support, and then we break down, we usually go back up to retest that as a resistance and then break down even further. And that's the true for the other side of the story too. Like once we are going up, we kind of test that resistance, we get rejected. We test that resistance, we get rejected. Third time, we see a breakout, we come back down to validate that as a new support before making the next leg up higher. So when you identify this really important level, that can act as both as a support or a resistance depending on which side of the trade you are on. So where are you trading for that? So in the case of Wish, there was a clean support at 1530 levels, previous resistance, and on June 9th, you'll notice that we almost exactly got rejected at 1530 levels before pulling back a little bit once again. Now, I will mention that we are trading above that 21 EMA, and looks like we are potentially going to open above that 50 exponential moving average as well. So there is going to be another near-term support that we can watch for Wish, and that's going to be roughly at $9.95, closer to $10. So that right there is going to be the support level to watch moving forward in the near term. And if you can see a successful breakout over 1538, then we want that level to start acting as a new support before making the next leg up higher moving forward. So resistance at 1530, support at closer to $10, and the 50 EM is also an important level to watch intraday. All right, so next up we are going to be talking about, so Silas says, saw a few posts in Wall Street Bets about Wish. So, all right, Side says, hi, I've joined your channel and impressed with your insights and analysis. Great job. Could you please see the short-term target for Amazon? Thank you for the great work. So Amazon, well, my target for Amazon is over $4,000. That's the price target that I have on the company, just based on the fundamental analysis that I've done. Like this company will be generating closer to about $1 trillion in revenue very soon, which is crazy to think about, right? A company that can generate over $1 trillion in revenue. It's absolutely insane. And of course, their AWS is only getting started with the new CEO. He's coming from an AWS background. He used to work at Amazon Web Services. So, Amazon, in my strong opinion, is still a pretty undervalued company. I would have liked to buy more at closer to 3,090 levels, but it didn't really break down. It actually broke to the upside. So the next resistance I would watch for Amazon is closer to 34.38 and 33.50 to start acting as a new support for Amazon moving forward. So, so one fast search says the best way to trade is in the Roth IRA. Yeah, you save all those taxes in the Roth IRA, right? So yeah, definitely, that's a smart way to do it. So yeah, so 33.40, 33.50 levels is going to be a support for Amazon, and 34.38 is going to be a near-term target for Amazon moving forward. And a lot of it depends on tomorrow's economic projections, right? So after tomorrow, I feel like we would be a little bit in the clear when it comes to some of those macroeconomic things, because unemployment would be behind us, inflation would be behind us, interest rates would be behind us, Federal Reserve's policy would be behind us as well, so the market will have a lot more clarity. And in fact, starting tomorrow, I do plan on buying a lot more shares as well. A lot more stocks actually starting tomorrow is when I'm going to be buying. So if you guys want to get all those alerts, the link is going to be down in the description below. Tomorrow, everyone who's part of our Discord, Patreon, starting tomorrow, you should see a lot of alerts in the long-term portfolio that I will be buying. A lot of stocks. I'm going shopping for the next few weeks to deploy some of the capital. All right, so next up we are going to be, let's see some of the stocks here. So let's talk about Palantir very quickly, and then we'll jump over to Caterpillar. So Palantir is forming, I should say, some type of a bull flag. Whether we see a breakout really depends. And I read an article this morning. They are going to be included in the Russell 2000 index, which is actually a big deal. Or actually, it was Russell 3000 index. So let me bring that up. So yeah, this was the article that actually came out 15 hours ago. That was really interesting. So you'll notice that Snowflake and Palantir Technologies, companies to be added or to join Russell 3000 index, while some of them are actually going out. So additions will be CleanSpark, DoorDash, Copin, Microvision is actually one of them too, Palantir Technologies, Skills, Snowflake, and Wix.com are companies that are actually joining the Russell 3000 index. So it's not a huge catalyst, but it's definitely good, kind of like a validation for the company as well as it adds on to that index. But the resistance level to watch for Palantir is going to be at 2550, closer to 2560 levels, and the support is going to be, there's a couple support. I would say the stronger support is at closer to $23, kind of aligned with those moving averages, and most certainly we're seeing that bull flag being formed, and all we really need to see is a potential breakout to the upside, and then once again this resistance to start acting as a new support once we see that breakout to the upside for Palantir. Mighty Trader, thanks so much for joining. I really appreciate that. So let's take a look at NNDM for Anita. And by the way, I do apologize if I mispronounce your guys' name. So yeah, I'm good with names, but it's just the pronunciation. I'm not really sure sometimes how to pronounce those, but for NNDM, definitely the trend is shifting. We're validating some of those moving averages, and we're just consolidating above the 21 and the 50 EMA as well. So there could be some more upside for NNDM. There's a resistance at 975, closer to that level. So previous resistance acting also as a support here, and that right there is going to be a resistance level to watch moving forward for Nano Dimensions. Closer to 975 support levels validated at those moving averages, most certainly seeing a trend reversal, because if you look at the pattern here, we've just been getting rejected at those moving averages twice. So once here we got rejected, false breakout, sold off, false breakout, sold off even further, and now we're seeing a perfect validation, so we're just staying above that level. So depending on whether it's a fundamental trade or a swing trade for you, swing trade, it's very clear that you can set one up with a stop loss just underneath those moving averages. If you do see a breakdown, you'd be only risking about 3% for a target at close to 975. That's a jump of 27%. So all we really need to see is a breakout over this 843 level. So that's going to be this resistance that we are just getting rejected at a couple times on heavy volume to see some more follow through and more continuation for Nano Dimensions to trade past 970, 975. But if this is not a swing trade, this is a long-term hold, then there's a lot that goes into the fundamental analysis. You need to look at the revenues, a lot of different things, and then you love those discounted levels as well, down to $6 a share, right? So that's a more of a fundamental long-term outlook on the company. All right, so Fiverr is actually breaking out a certain level that I had marked as an alert. All right, so we are roughly down about up over 18 basis points, trading just under $204 per share. So still looking into this play a little bit more in detail as the price action develops for Fiverr. But again, Fiverr, Upstart, they kind of compete together in the same sector in like this gig economy. All right, DraftKings with a massive drop. Chance of teens. Adam, do you mean for DraftKings, like drop like over 12 or 13%? Is that what you mean? That question. But yeah, DraftKings still haven't been able to find that report. All right, here it is. A 21 billion SPAC betting it can hide its black market operations. What? Oh my god. All right, here's the report on DraftKings. It came out 30 minutes ago. All right, this is a pretty long report. I mean, do you guys really want to go over this? Look at the amount of research that has been put into this report. Look at this. Wow. I mean, this has to be a separate video on its own, right? I mean, look at this goes on. They've got screenshots. They've got, like, in February 2021, Thai authorities in province raided alleged illegal gambling operations. Round of 4 converted shipping containers. This report just goes on. We have to. Well, I'll have to probably do like a separate video on this. And conclusion. All right, let's just quickly skim through this because this will take a long time to actually go over this during the live stream. The SPAC boom has been defined by companies going public despite major lurking issues, whether it be fake technology, i.e. Nikola, unrealistic projections, virtually all of them, or other undisclosed landmines. Meanwhile, sponsors and insiders have been cashing out while hoping their marks, mostly retail investors, don't notice. One issue with partnering with black market betting operators is that such businesses are not just engaged in illegal betting. These operators almost by definition are engaged in money laundering and often additional lines of underground business activity. The same former employee explained that DraftKings and its SPAC sponsors must have either known the issues with SB Tech's black market operations or were grossly negligent in their diligence. So DraftKings has never identified the nature of its BTI Core Tech relationship in any SEC filings, thought has an affiliate subsidiary of SBD Tech or in any other way as relevant to DraftKings SPAC combination with SB Tech. So given the importance of SB Tech to DraftKings' top and bottom line, it is virtually impossible to fathom that DraftKings was and continues to remain unaware of its ongoing relationship with BTI Core Tech and its illicit operators. So I feel like it's more of an operator and the way the companies that the DraftKings is partnered with, not so much about DraftKings fundamentals or valuation or the management, so to speak, but it's more so of a target with the companies that they're partnered with. But again, I'll have to definitely take a read into this in a lot more detail, and then I'll be able to share my opinion in sort of like a informed way. But what do you guys think? Yeah, solo video for sure. Yeah, so I'll definitely save this and I'll go over this. But wow, I mean, down about 9% now. Ooh. So Muhammad, if you're just joining in, I would highly encourage you kind of go back on the live stream and look at the report that we went over when it comes to inflation. We went over the PPI, the core PPI, and a lot of other things as well. So highly encourage you to go back, check out that, and then you can jump over to the live stream. But let's take a look at the price action for DraftKings here intraday, right? So we sold off aggressively. We saw a little bit of consolidation here, or we are seeing some. But let's take a look at the volume and how many shares are actually being traded. So 84,000, 254,000, 218,000, 547,000, 465,000 shares traded. Let's take a look at the current short interest on DraftKings right now. Yeah, so let's go over to Caterpillar very quickly. We've got a potential swing trade on that. Let's take a look. So we are slightly down about 23 basis points on Caterpillar, trading at $218.50. This is a little bit of an accelerated selling in my opinion for Caterpillar. There's two support levels that are identified. The RSI, the MACD, very oversold, and this sell-off was a little bit forecasted because we were forming some type of a negative divergence. So, higher highs on lower highs being formed. So that's why we saw a significant breakdown below those moving averages. And this is in fact the first time that Caterpillar is actually breaking down underneath those moving averages, because historically you'll notice that we have consistently validated those support levels time and time again, and right now we are seeing a bit of a breakdown below those levels. But that being said, $215 or closer to $216 is going to be support, all the way as low as $209 per share. And I would not be surprised if we do get a retest of those moving averages once again at closer to 230 levels, and that kind of like a back test, and then make more lower lows in the future. So the trend is definitely shifting. Like, we're going to start making lower highs and lower lows here, because you'll notice that we are already starting to make lower lows. The only question is, are we going to see a back test of those moving averages, right? So that's the real question. What's the catalyst for Caterpillar selling off? That's a great question. I strongly believe that we're seeing a bit of a technical shift here for Caterpillar. So I mean, they also increased their dividend. I was looking at it, I think it was like $1.10 in annual dividend. But I think it was more of a technical sort of breakdown. And of course, as we move away from some of those value and cyclical plays, a lot of institutions are going to start to look into kind of book those profits, because think about it, right? Think about this. Caterpillar as a company has absolutely rallied since May 2020, 144%. Caterpillar, right? Those are types of moves that you see from like a tech and growth name type of company, right? And this, of course, 2020 was like an anomaly, and and it's the same time, even coming in from like January of this year, the stock is up over 37%. While Apple, Amazon, Shopify, Square, PayPal, like all those companies kind of consolidate. They didn't do anything, right? They moved sideways. So I think this is more of a technical correction here, but it does have some support levels that we can certainly take advantage of if the trend actually does shift. And again, in the short term, because over the long term, I'm still pretty bullish on tech and growth. So I do see a rotation away from value and cyclicals over back to some of the tech names. All right, let's take a look at DraftKings and what that short interest looks like. All right, so percent of float is about 10.9%, but this is also as of May 28th. So this is not real-time data according to Ortex or anything. This is simply in Wall Street Journal. So 34.26 million shares sold short, 10.9%. So again, I would not be surprised like after today, like we'd be like in mid-teens or high teens. Considering that we are seeing Hindenburg Research also take a potential short position. 400 million shares outstanding. Public float is 314 million shares, and almost 11% with 34.26 million shares sold short. I mean, if any of that report, and again, I'm gonna read more through it, and I'm gonna do some more research on that. If any of that report has any type of false claims or accusations that they're making towards DraftKings just for the purpose of it selling off, then if that report lands on Wall Street Bets, oh my God, I can't even imagine what they're gonna do to DraftKings. Can't even imagine, because that's the type of stuff that really frustrates us as retail investors, right? These are great companies, and if they come out with these annoying accusations on certain companies, like they can even go as far as create fake lawsuits or something on a company, put that as a headline, and when people read that, they're like, oh my God, it has a lawsuit against this company, might as well sell right now. So that's the type of stuff that we have to deal with. When it comes to doing the diligence and research, it has to really be like a deep dive on some of those companies, because these short sellers will go at length to do anything they want to basically bring companies down. Like it's literally just bringing companies down on a simple report, like an extended report that they're going to put out, and that's it. Like that's the same exact thing that we saw with AMC, right? AMC is just like the movement that everybody's following along with, because they want to actually keep that business alive. It's like, even like I'm not even in the United States, but I still went to an AMC theater when I was there. And I don't want to go. I don't want to see that go out of business, because those like good memories, right? So, and they obviously want those companies to burn to the ground. It's like, But anyway, all right, let's take a look at the markets here. So, oh, look at that. The NASDAQ down about 18 basis points. The SPY is pretty stable, pretty much up over 3 basis points. We're not seeing that much of a pullback compared with the NASDAQ. And let's take a look at the markets here. So financials pushing higher as the yields. I'm guessing the yields are up over higher as well. So 1.508 up almost 1%. So as the yields push up, we're seeing the financial sector push up as well. So XLF, this is the financial sector, up over 27 basis points. And industrials, everything else is pretty much flat, with tech down about 24 basis points. So let's take a look at NIO. And we're down about almost 1%. Let's take a look at Tesla. Down about 28 basis points. Let's take a look at Apple. Down about 45 basis points with about 14 minutes left for the markets to open. Amazon, and we are slightly down about 36 basis points. Google is down about 16. AMD pretty much down about 34. Nvidia, I swear to God, if Nvidia continues to rally on this momentum, that would be incredible movement. Like, I would not be surprised if we get a perfect split of $200 a share on Nvidia, and that would mean that stock is trading at 800 by the date of the stock split, because of the momentum that we have seen on Nvidia stock. So the stock split is actually on July 21st, so 441. So we still got about a month left for Nvidia to continue on this momentum. That would be epic. Yes. So Nvidia has been a godsend for my portfolio. I agree. It's just been on a incredible momentum here. Coming in from March, it was at $185, almost 300% return. But the one thing that I do kind of fail to understand with respect to like the chip, shortages and everything, is that Nvidia and AMD almost have identical revenues. AMD will have almost the same revenues as Nvidia that Nvidia had last year, and they're trading at a completely different valuation. Nvidia trades at a much higher comparable, like it's almost a $500 billion company, whereas AMD struggles at $100 billion, right? So that's the only kind of like mispricing that I see in the markets with respect to advanced micro devices, Nvidia. All right, so let's take a look at Baidu. So I feel like Baidu is very similar to, of course, with Alibaba. It's just been on the same trajectory. So if I were to bring up, if I were to compare this with Baba, you'll notice they've just been on the same exact pattern here. Yeah, I don't know why it's not working. But anyway, so Baidu coming in from highs of 359. We are down a little bit over 48% as well. I mean, this was part of the Archegos event. That's why we saw like this 2 days when the volume spiked significantly and we were down over 34%. But now we're trading below the moving averages as well. There is going to be a resistance at closer to $203. And a support at close to 175. The casino opens in 10 minutes. Yes. Yes. So 175 is going to be a closer support for Baidu. It's kind of like a double bottom support here. So, we tested that support coming in from March 26th. This is also a level that we validated for pushing higher. So closer to that level, 175, 176 is going to be a good buying opportunity in my opinion. And of course, $203 is a very strong resistance, also aligned with that 50 EMA, where we have just struggled to break out over both the moving averages. So once we get that breakout over 203, that's when I actually do see the trend to actually shift and eventually make its way back up to 229, 230, and potentially start making higher highs and higher lows. Let's take a look at MELI, so for lead. Alright, so very similar pattern to a lot of the stocks that we've covered, like in the other sort of like YouTube space. So you'll notice that it was trading as high as $2,000. So we were down a little bit over 35%. So it seems to have a really good support at closer to 1,300. But again, that's the moving average is very important here because again, 21 EMA got rejected here, 21 EMA got rejected here. So now we're seeing a little bit of a breakout above that 21 exponential moving average. The resistance level to watch is going to be closer to $1,490 or $1,500. that's going to be sitting roughly over here. Yeah, so previous resistance, we got rejected, back tested support here, so that right there is going to be the level to watch, at least in the near term, and support level like closer to 1300. And really, a trend reversal depends on whether we see a breakout over those moving averages or not in the future. All right, so about 9 minutes left. The yield's still up a little bit over 0.5%, with the Nasdaq retreating a little bit, down about 13 basis points. The S&P is just about flat. So Bruce, that's a great question. I am still looking into a lot of different charts and patterns here. I will post one. There'll definitely be one this week. So today is again what, Tuesday? So tomorrow we got the Federal Reserve meeting, and then after that I will definitely be posting one for a swing trade idea over at our Patreon. So you will get that definitely. So Jose, we went over a wish earlier in the video, so you can kind of go back in the live stream, watch the wish analysis, and then jump over to the live session. We also went over NIO, Andre, so again, you can go back and check out the analysis on NIO and kind of jump over to the live stream. So, are you selling any of your equities or trimming positions? I am not, Christian. I haven't sold, I don't think I've sold anything so far, and especially in my long-term portfolio, I haven't sold anything. I've just been buying and buying and buying. Like, I've literally just been buying. And again, over the next couple weeks after the report that comes out, like the interest rate decision, all that comes out tomorrow, then I'm gonna actually go and start shopping more. So I've got some capital to deploy. So again, if those alerts, if you're interested in those, the link is gonna be down in the description below. So I will be buying a lot more stock moving forward over the next few weeks. So Christian says, I've been selling some of my high PE stocks since I feel like inflation is not all transitory. So yeah, I mean that's a great point. I mean, high multiple stocks do get affected the most, and you know that's smart, because in a market where we have seen higher multiple and growth names get hit the hardest, earlier this year till now, we've seen a lot of stocks. Like if you look at you know, a lot of these companies that we analyzed in the past, you know, like Plug Power, like it's still down from its all-time highs substantially. Like Skills has made some type of recovery, but we're still you know, down substantially from $46, $47. CCIV, you know, Lordstown Motors is another one. Workhorse, you know, Clover Health. Clover Health is a little bit of a different story, but NanoX Imaging, I mean, all these companies that are down substantially from their all-time highs, they were a little bit on a higher PE sort of stance, and they were very richly traded, which is what the market priced in immediately once yields starting to push up higher. So Leon says Hindenburg just released a short article to tag DraftKings. Yeah, so we did break down briefly. We kind of skimmed through this report a little bit. I'll be doing some more research on this, but yeah, DraftKings definitely taking a little bit of a hit here on this entire report. Down almost 10% when we last looked at it, so down about almost 11% now. So yeah, $45 is where it's trading. The next support, you guys already know where that's going to be, closer to 44.50 levels. Let's see if that actually does get validated. We got less than 6 minutes for the markets to open. Do me a favor, you guys, just hit that like button. Really helps out the channel tremendously, and also subscribe if you're new to the channel here. We talk a lot about the fundamental analysis, technical analysis, and the macros. Those are 3 things that we cover on the channel. The first thing I love to do is talk about macros, fundamentals, the economy. The second thing, fundamental analysis, valuations. And the third thing is technical analysis, so the charts and patterns, because everything gets priced into the charts. So Leona, the investor tier should be open. I created a new one because the earlier one was the early bird, so we had like an early bird discount for most of our investor tier Patreon members. So that sold out. That was sold out a couple days ago, but then, you know, a lot of people started reaching out, so I had to open up a new one. So we do have that, again, limited spots on that one too, but that one will be closed very soon too, because the earlier one was the earlier bird, so that was a discounted one that we had. But that one is unfortunately closed because it's now filled up. So Mark says, Caddy, this hit piece is really dumb in my honest opinion. As soon as the company tweets the stock is going to explode back up. Yeah, I mean, like I said, I mean, if Wall Street Bets gets a little bit of a wind of what Hindenburg Research is doing with the short interest that we looked at close to 11%, again, that's not real-time data. Real-time maybe like in mid-teens. Again, I'm speculating at this point because I don't have the Ortex real-time data. If short interest is higher on that stock and this report even is remotely not accurate, then yes. I mean, DraftKings would definitely be be gobbled up by retail investors to basically moon all the way past over $70, $85. We could see that, right? And again, this hit report, like I said earlier, is what frustrates us as retail investors, is because short sellers, they'll use a lot of like dirty tactics and a lot of different strategies to really bring companies down. Like this is a live example, is why we don't like retail, like hedge funds, like is why, because of what they do. Right? They want companies to fail and they want companies to go back down. It's just, it's insane. It's ridiculous, right? It's so frustrating. Like when this happens to the company that you really like and you support and you are really invested in, that's when it really hits you hard, right? It's like, it's just, and that's what happens when it collectively happens. That's what's going to drive to for a potential short squeeze in the future. Santiago, thank you so much. I really, really appreciate that. So would you say AMC is still a buy at this point? So AMC is, let's take a look where it's trading. Actually, we haven't looked at AMC all day today. So up over 2.8%. So $60 is kind of like the resistance that we talked about. You'll notice that literally, like right now, I kid you not, we're just consolidating sideways, right? So $60.58, that's the resistance that we talked about in our yesterday's video. And we're just consolidating sideways at those levels. So that is the level that we need to see a breakout over in order for us to see some more follow through. But talking about some of the call options and just the open interest, we've seen significant volume on that in general, right? Seems like somebody's spamming about Pink. What is Pink? I don't know what that is. Is it a stock? PINK? But anyway, so this right here is the June 18th, so expiring this week on Friday. You'll notice that strike price is at $50, $55. The open interest is huge at $23,000, $16,000. You go up to as high as $59, $60 strike prices. That goes up to $22,000, $31,000. So when market makers are actually selling these calls, what they're doing, they're actually going to buy more shares, so the 100 share stock. All right, so I'll take a look at Pink in just a second. I would really appreciate it if you don't mention it. But for AMC, it's definitely forming some type of a consolidation pattern. A breakout needs to happen in order for us to see some more follow through. The volume is picking up, so it really depends. I mean, we had a trade plan set up on this at closer to $49, $50 with a really strong stop loss underneath this support, so double bottom support. So it was forming a bullish pennant, and we are seeing a bit of a breakout. So buying at these levels, you have to understand what you're getting yourself into. So like the risk associated with it is going to be the most important one, right? The risk and the volatility, that's something that you really need to kind of price in and understand because this is incredibly volatile stock in general. Yeah, so yeah. All right, so the market's about to open in about 30 seconds here. So we got the NASDAQ down roughly 10 basis points, and the US 10-year yield is about 1.5%, or closer to 0.5%, not 1.5%, so 1.5% here. And SPY is roughly up over 50 or 5 basis points. What do you guys think? What about tech today? Down or up? It's gonna be red or green. I actually read. All right, so the markets are open here. So DraftKings breaking down over to 44.82. Ooh. So we got AMC that's up almost 2%. Let's take a look at DraftKings here. Oh man, DraftKings is just on a significant pullback here. A lot of volume coming in at these levels. I might actually buy DraftKings right now. Even though I haven't read the report, I might buy a little bit of DraftKings just because it's down quite significantly. Alright, let's see. I'm gonna actually put a dollar amount, not a whole lot. Alright, so just 1 second. Alright, so bought a little bit of DraftKings today. I'm gonna send a quick alert there. Harry, that's a great point. Today is quadruple witching. This week is quadruple witching, so I'll definitely be keeping that in mind. So all right, so just send out the alert there. And again, if you guys want to get alerts, if you guys want to get the private Discord chat and the trading view setups as well, the swing trading opportunities, the link is going to be down in the description below. Very limited spots available, and I will be closing that as well. So not till Friday. I'll have to do some more research exactly when that is. But quadruple witching is basically when a lot of those options contracts, futures contracts, they all expire on the same day. And it's a Friday that happens like 4 times a year. There's usually a lot of volatility in the markets, and the volume is also incredibly high because a lot of people roll over contracts. They actually need to make decisions what they need to do moving forward. So what inflation data is coming out this week? It actually already did. All the inflation data is now out. We had the CPI data came out yesterday. And also the PPI numbers also came out today. So look at the NASDAQ, down about 37 basis points here. Look at this drop. The SPY also down about 7 basis points, but the NASDAQ really taking a little bit of a tumble here. Yeah, I'll have to read more on the report, but I'm honestly not that worried because it seems like very oversold at this moment. Way too much weakness on the stock, and if it does sell off, I'll be buying a little bit more anyway on DraftKings. But let's take a look at some of the stocks here, shall we? So NIO is down about 1.27%. Let's go over to the 5-minute chart. It's going to be more interesting. Intraday price action. All right, we're going to split this 4 ways. We got NIO, top left of the screen. So what I am going to do is I'm going to actually restore the chat. Move you guys over here so we have more room. All right, so we got NIO top left. Let's take a look at Tesla here. Let's look at AMC here, and let's take a look at Apple. Look at AMC, $60 breakout there, coming in strong on volume at closer to 19 million already traded. Absolutely incredible, just phenomenal price action on AMC. I'm really like surprised. Well, not really that much surprised, but the amount of effort that's gone into AMC is never seen before on a global scale. Like, it's on a next level, right? I was just watching Bloomberg the other day, and there's investors from all over Asia that also want to get into AMC stock. We have a couple apps here called Vested that allows you to actually trade and invest in US equities. The #1 traded stock I think last week or a couple last week was AMC stock, and most investors are here in India and in Asia. So absolutely incredible. The effort that we've seen collectively, like just from the whole retail community, is never seen before, like never seen ever before. Absolutely incredible. All right, so Tesla is slightly down, not by a whole lot, but down about 1% almost. NIO still holding up, down about 1% still. Apple is down about 66 basis points, and AMC is up over 5%. There we go. Caterpillar's up over 28 basis points. We are seeing a bit of a rotation here, away from tech and growth, over to some value and cyclical plays. So what do you think about G7 15% global tax proposal? That's a great question. I think it's great. Amazon CEO Jeff Bezos also mentioned, I think it's a good idea. And it's going to provide some more clarity on the global taxation issue that we've been having for so long, on revenues in different countries when it comes to the United States, European unions, and of course all over the world. But the real question is really how that affects the businesses, right? 15% of course affects their bottom line EPS, but I think over the long term that is good for the companies, because a lot of times you'll have all these regulations in place where it leads to a lot of scrutiny, but this is getting put forth by the federal government, so I think that's good, and as long as companies are on board, I think it won't be as big of a problem. All right, so we will definitely take a look at what is it, Blink as well. So so KMX actually had an alert go off. Let me see where are we trading? Are we up or down on that? All right, so we are up almost 70 basis points on this one. This is another one of those plays that I mentioned. We'll give it a couple more days. We have 122 as a target. We'll see if we actually go up to that level. So that's the target here for KMX, closer to 122. But Tesla, a little bit on a drop here, down about 1%. AMC pulling back slightly, back under $60. Jesus, a lot of people are just spamming different stocks here today. What is going on? But yeah, so NIO slightly down, closer to 1% here. All right, so let's take a look at the entire market here. So the Nasdaq still pulling back a little bit, 30 basis points. The yields are now up over 1.51, and the S&P is also down about 12 basis points. But the overall market, AMC is still up over 3%. Corsair is up over 1.3% here. So I can take a look at Oatly as well. Can you take a look at Oatly? Okay, yeah. So I'll definitely do that. So played calls on Caterpillar at 216 yesterday for a 46% gain. That is awesome. Congratulations, Cole. This is what makes me happy, right? This is exactly why I do it. This is what makes me happy. That's incredible. Congratulations. That's awesome. John Deere is up a little bit over 51 basis points. Caterpillar slightly up. Palantir, Facebook slightly in the green as well. But across the board, we're seeing a lot of red here. DraftKings now down about 7%. So we have pushed up a little bit from, we were down over 11%, and right now we are pushing higher. CCIV is down about 2%. Twilio, Fubo TV, all down in the red, anywhere between 2.5% to 3%. TTCF, Square, NNDM, Peloton, and Phase Energy, they're all in the red. With the Tesla, Clover Health, NIO also slightly in the red as well, so they are down. But it's kind of like I would say like a flat reaction, especially from the SPY. The Nasdaq more so because inflation fears, I guess, the PPI numbers coming in a little bit hotter than expectations. Where is Coin trading? I don't even know. Yeah, so Coin is slightly down about 1%, very aligned with what we're seeing with tech and growth. So, yeah, Tesla is a little bit of a pullback here. Tesla has been kind of consolidating sideways for a really long time. It hasn't really done much, right? So Tesla in price targets for a lot of people are at well over $1,000. We'll see. Second half of the year, in my opinion, is going to be where tech really flourishes. Right now, we're still a lot of uncertainty in the future. And NIO down about almost 1.8%, almost 2%. And Apple is also down slightly over 60. AMC still struggling at. What do you guys think? AMC gonna have a good breakout over $60? What do you guys think here on AMC stock? Sold puts and already up. All right, awesome, that's great. NIO will shake out some profit takers today. Wouldn't bet on it. AMC loses volume and drag size. Yeah, so the volume, let's take a look. The volume is now at 30 million, so we are coming in a little bit of a lower volume day, I should say, because usually, like, I feel like we're much higher on volume for AMC stock. But you gotta love these morning dips. Like as soon as this morning opens and we see like these significant pullbacks, this is where like intraday, you know, these are strong opportunities to get in, because there's a lot of weakness right at the open. There's just a lot of, you know, people just selling, you know, in the first 15-20 minutes. If you can get a good deal at those prices, whether it be options or regular shares, that's the time to actually be buying a little bit more. So NIO 700K volume since open. So NIO shows 5 million volume since open. Still down roughly a little bit over, closer to 1.5%. So recovery in the Nasdaq a little bit, right? 17 basis points. Let's see if we can actually break out over the high of the day. I'm gonna push away the yields here. Just focus on the Nasdaq a little bit more. Patrick, good entry on DraftKings now. It's definitely oversold in my opinion. I just sent an alert to our Discord. We did buy a little bit this morning, right at the open. So we are seeing a bit of a recovery intraday. And again, it's only because that support level was getting tested at closer to 44.50, 44.65 levels. Let's see if we can actually break out over that 21 EMA and over that $49 level, right? So that's going to be the 21 exponential moving average. That's where we are getting rejected intraday right now. This is pre-market. This is 8:30 till, you know, this entire sell-off of over 12%. Support level was around that level, like closer to 40, 44, 50 levels that we talked about. And that is where I would have bought it at those levels, but got in a little bit later, but that's okay. But yeah, I mean, it's very oversold. I still have to go through that report, so I'll definitely be doing some more and additional due diligence, probably like a dedicated video on DraftKings to kind of share my thoughts on what I think from the report. But yeah, there's definitely a lot of hits on DraftKings right now. All right, so this is our horse race. So we have energy up over 87 basis points and everything else kind of behind. So we got a leader, which is energy. Let's take a look at oil prices. Where are they trading? So energy, oil prices. Wow, look at US oil and UK oil. That's Brent crude, $74 a barrel almost. And WTI crude at $72 a barrel. That's incredible. Oil prices continue to push up. I feel like there was an OPEC report that was supposed to come out. All right, so this is for the month of June. All right, this was June 10th. This is, I thought there was something that was coming out on OPEC that we had on the June's calendar. So this is as of June 10th, 2021. So oil market highlights, crude oil price movements, commodity markets, world economy. Again, we're not going to go into too much detail here, but instead just try to get a good understanding of, you know, what the actual headline items look like. So the global economic growth forecast for 2021 remains unchanged at 5.5%. Although the forecast continues to be impacted by uncertainties, including the spread of the pandemic and the speed of the global vaccine rollouts. In addition, sovereign debt levels in many regions, inflationary pressures, and central bank responses remains key factors to monitor. U.S. economic growth revised in 2021, slightly up over 6.4%. So that's going to be the GDP growth that they're referring to here, following a contraction of 3.5% in 2020. The economic forecast in the Eurozone in 2021 is lowered slightly to stand 4.1%, following a contraction of 6.7% last year. World oil demand. So non-OPEC liquid supply in 2020 is estimated to average about 62.9 million barrels per day. So the highest that we have ever seen, I think Kathy would also mention, was back in 2008 when it was at well over 110 million barrels. And I think right now we're sitting roughly at 89 to 90 million barrels, representing a year-over-year contraction of 2.5 million barrels per day for 2021. Non-OPEC liquid supply is revised by 0.1 from last month's assessment, is now forecast to grow by 0.8 million barrels per day, so almost 800,000, to average 63.7 million barrels per day the entire 2021. This is mainly due to the faster than expected recovery in U.S. liquids production of 2.5 million in March. So I do apologize of my sort of knowledge base on oil and energy. I'm not too familiar with this, but definitely it's an area that I need to kind of learn more. But yeah, we'll definitely take a look at this in more detail in the future. But all right, QQQ's definitely pushing higher a little bit now, down only 8 basis points. So we are seeing a bit of a recovery here, with Apple pushing higher. So we're pretty much flat on Apple. AMC, we're up over 2%. Tesla still down over 1%. Palantir, somebody's saying Palantir, wow. Let's take a look. All right, so we're seeing a little bit of a breakout here past 25.41. Actually, I should put Palantir over here. So 25.60 is the resistance on the day, right? So that's the level that we're going to be watching. That's the bull flag. We're seeing a bit of a breakout here from Palantir. What do you guys think? 25.60 or beyond? Yes, so Palantir running. I'm watching that right now over here. Again, the catalyst came out that are going to be included in the Russell 3000 index. We covered that earlier in the video, and probably one of the reasons why we're seeing a little bit of a rally here. Other than that, I didn't see them win any contract. Let me see if I can find anything, but yeah, so there's not really any contract news for Palantir stock right now. And we're seeing a bit of a breakout already. All right, so we're seeing a little bit of a turn here from some of those growth and tech names kind of turning green, especially Square, Amazon now just shy of 3,400. Shopify breaking out another 1.5%. There we go. So we're up, trading past over 1,300, and so yeah, and Coinbase still down a little bit over 1.5% here. But Google continuing to make new all-time highs. Absolutely incredible. But look at Palantir, almost 2% gain on the day. 25.50 is the high for the day. We're like almost trading at those levels. So actually, let me go ahead and make this full screen for Palantir stock. So yeah, definitely seeing that momentum to the upside. Bit of a choppy pattern here. So we did see some type of a pullback, and then a buying pressure came in, validating some of those moving averages. 25.60 is going to be the level, kind of aligned with this previous resistance. So let's go over to the daily chart here quickly. And this resistance, again, is going to be closer to 25.67, 25.65, closer to that level is going to be the one as a resistance we're going to watch. So NDX is flying. Yes, so we are making high of days. While the S&P 500 just consolidates a little bit. So yeah, definitely seeing more of a buying momentum here for the NASDAQ. And as we get more and more risk on, we're seeing the NASDAQ fly even further. Workhorse, buy, sell, or hold? Bruce, that's a great question. All right, DraftKings alert just went off. Let's take a look at DraftKings here very quickly. All right, so we are down about 6 basis points, but we are getting a lot of buying pressure here from DraftKings. So we are only down about 6% trading past over 47.52. So alert at $48. Keep an alert all the way as high as $50, 53. Create some at 45, 46. All right, so Workhorse, you know, it's kind of a tough analysis on that company because, you know, there's, if I'm not mistaken, was Workhorse and Lordstown Motors, did they have the same CEO? Because I know that Lordstown announced yesterday that their CEO is actually resigning, but I'm not sure if they both had, both companies had the same CEO or not. Or maybe I'm mistaken. Okay, no, so it's not the same CEO. But Workhorse is, you know, a little bit of a tough call here. It's the same thing with Lordstown Motors too. I mean, it's, you know, the recovery for these companies is too dependent on the revenues, the future of what they actually do. So I feel like the risk reward is definitely very attractive. Like you'll be risking, you know, not for Lordstown, but for Workhorse, you'd be risking a lot less for having a lot more upside potential. But just the time horizon is like, you know, for how long, right? This could be a few months, few years, you know, a lot of time as well. So that's the real question for Workhorse, in my opinion. So I feel like there's better opportunities in the markets. That's how I feel. All right, so we're almost about half an hour into the markets. We are seeing S&P pull back a little bit, and the NASDAQ is also down about 11 basis points, pretty much aligned with each other. So we're flat on the day, with Palantir up almost over 2%, breaking past over 25.52. So we are certainly seeing a lot of momentum here. So 25.65 is kind of like the resistance. We'll see if we actually see more momentum past that level. But yeah, like tech coming out of nowhere, right? So tech was all the way down here. So at 932, let me see if I can remove a lot of these. But if you guys, can you guys see this all the way down here where I'm pointing to? Like here. Tech was at the bottom at 932. As soon as the market's open, we sold off. And then look at this rally. Like we're third on the day. You know, down about 7 basis points, and then followed by consumer staples. Of course, energy is the one that's pushing up the most because oil prices are much higher. But the NASDAQ definitely pushing higher. So, all right, let's take a look at Tesla too. Seeing a bit of a recovery, so you know it's not all bad for Tesla. Let's take a look at NIO here. All right, so we're seeing a bit of a recovery for NIO too. You know, they're still down about 40 basis points, but let's bring out the yields here because I see a few people mentioning the yields. Yep, so we're seeing that, you know, as soon as the yields come down, tech starts pushing higher. It's just clockwork in both directions, right? It's incredible. So the yields tapped out at 1.512, 1.513 is a high for the day. And we're seeing a bit of a pullback here as QQQ ETF and the tech also pushes higher. So DraftKings still down a little bit over 6.8%. And this right here, let's bring out our 4 split chart once again. So Palantir up over 1.68%. Tesla down about 60 basis points. AMC up over 3% still. Let me see where Mara is trading. Down 1.3%. So is Bitcoin back down under 40,000? So just under 40,200. All right, so I'm gonna break down a few more stocks here. Well, let's see if we can break down a few more stocks. Then I'll have to kind of cut off the live stream because I will be spending some time with our Discord members in the private chat. All right, Workhorse. All right, let's take a look at Workhorse here. Corey says, say something positive about AT&T. All right, so Workhorse, again, you know, we're seeing a little bit of a trend reversal here. I'm gonna give credit where credit's due. Definitely been a massive push higher. This also is a stock that has a lot of short interest. So I think it was like one of the highest short interest stocks, at closer to like 30%, 36% the last time I checked. It needs to kind of hold that support at closer to 1290 levels. So that right there is going to be the level to watch, or 1280, so to speak. So, you know, that 21 EMA, the 50 EMA is going to be the level. And there is going to be a really important resistance. Like if there's one resistance level that you're going to be watching for Workhorse, it's 1865, closer to this resistance once here, twice here, and previous resistance as well, validated support. So that's the level that we are getting rejected at. That would be the range within which I would watch Workhorse, right? If it breaks down below those moving averages once again, this is a swing trade. In my strong opinion, that's where the stop loss needs to be. But if you can get that breakout over 1862, then there's more likelihood that we see some more follow through and some more continuation in the future as well. So Marcel, great question. Cover mostly growth and tech names. Very few long-term value companies that we covered. You know, I'll cover value ETFs that comprises of some of the value stocks, but mostly when it comes to individual names, it's mostly tech and growth names. But definitely we do cover some value ETFs as well. Like one of the ones that I've been watching is going to be a combination between IWD and IWF. So IWD is 1000 value ETF. You'll notice that it's been consistently pushing higher, but you know, considering the RSI, the MACD here, the way it's looking, would not be surprised if you do see a breakdown for this value ETF. Only because look at the RSI, right? It's just been lower highs with us validating that resistance here. So that's kind of like also my thesis adds to my thesis as to why, you know, value could see a little bit of a push downward and correction here, because, well, negative divergence, a value ETF also looking weaker and weaker. I would not be surprised if you do get a breakdown below 157 for this ETF. On the contrary though, IWF is going to be 1000 growth, and that's what's been rallying a little bit higher, right? So see this rallying a little bit longer in the future as well, as money flows back into tech and growth names. All right, so again, clockwork, yields pushing higher, and the NASDAQ is slightly down once again. Palantir, the high for the day, 25.55. Almost getting hit at that resistance, right? So we're seeing that pullback from that resistance. We'll see if rest of the day we can get that breakout over that level. BMBL, Adam, that's a great suggestion, my man. I was actually looking at Bumble for a swing trade, but I didn't actually take it. But you know, just because I didn't feel confident on that trade. But Bumble, of course, has been on a strong move coming in from the last like few days. You'll notice that it has just been on a rally coming in from like 38 bucks up over 33%. It's testing a resistance here, so that's the level I would watch at closer to $51.80, so $52. And support level is going to be sitting roughly at 44.50 levels for DraftKings moving forward. All right, guys, so thank you so much for joining in. I really appreciate you guys' support. And again, this right here is going to be, you know, the Webull and the Patreon links down in the description below. Feel free to check it out. Again, limited spots available. We did have, you know, the early bird kind of sell out, and we've got the newer one, the newer tier. I just opened that up. So the early bird is sold out, and the new version is now open. We got limited spots there. So thank you so much for joining. I really appreciate your guys' support. Hope you guys got a lot of value out of this video, and again, we'll do this again tomorrow because we've got the Federal Reserve's meeting and some other reports that we're going to break down very quickly as well. So again, thank you so much for joining in. I really appreciate it. Love you guys. Peace.